So this video is going to cover how to create an an adjusted trial balance, which is step 5. Now what we're doing is building on the unadjusted trial balance and showing the impact of those entries to the accounts. Now, that means that when you're creating one of these, you're going to want to have your original unadjusted trial balance, and you're also going to want to have those adjustments that we made to that handy so that you know how these things are working. Ideally, obviously, you will want these adjusting entries to also have them posted to T accounts. And I've already done some of that in the prior problem as we were working through. Some of them I didn't if they were less interesting, but we also have that going for us. So when you're doing this on your own, you need those elements in front of you so that you know how to complete this adjusted trial balance. Some notes: there are going to be some accounts that are just not going to change from an unadjusted trial balance to an adjusted trial balance. One of those in particular will be a cash account. That will just never change because, remember, cash is not a part of any adjusting entries. And so since we're not adjusting cash, we don't expect it to change from step 3 to step 5. We'll also be adding some new nominal accounts that are not appearing on the unadjusted trial balance because they're introduced by adjusting entries. One thing that you always want to remember here are any estimations by the accounting process. So what do I mean by that? I mean, for example, depreciation, bad debt adjustments are not on the unadjusted trial balance, but they are on the adjusted trial balances. Now, everything, all revenues, expenses, gains, and losses should be on the adjusted trial balance, including tax expense and taxes payable, which is that final adjusting entry that you would record. So remember, always include that one as in your adjustments. That will be on the adjusted trial balance. You can only now determine that tax expense because all adjustments have been made and properly include all the revenues, expenses, gains, and losses for the period. I give you a little calculation for how to get to tax expense, which we looked at when we made that final adjustment. When we now have all of those items, we can prepare the income statement from the balances found on an adjusted trial balance. And in fact, this is the statement from which we will prepare an income statement, because we can't prepare an income statement from the post-closing balance, because as we'll see after we close, we no longer have any revenues, expenses, gains or losses, or dividends on the post-closing balance, right? But let's look at the adjusted trial balance for now. We know that I've just taken some of the balances out that have changed. As you'll notice, again, a lot of these don't change over time. And so that, shows you that there are a good number of accounts that just aren't changing from step 3 to step 5. And I've blanked out the numbers where numbers have changed. I've added in some spaces to put in the additional accounts we created through our adjustment process. So the first is that prepaid insurance account. And remember, if we go back to our adjustment for prepaid insurance and show how I posted it to the ledger, two things occurred. First, prepaid insurance changed and we created insurance expense, which was not an expense that was listed on our unadjusted trial balance. So those are the two first items I'm going to change on this adjusted trial balance. The first is the change to the prepaid insurance, which by our T account on the prior page is now at a $20,000 balance. And the second item was that insurance expense, which we previously had not recorded, that we now want to drop in here at $10,000. All right, so what happened was I credited my prepaid insurance by $10,000, bringing that down, but then I debited my insurance expense by $10,000 netting out a zero change between debits and credits. So now we have the same debits should equal credits. We haven't changed everything overall. The next item that I adjusted was I created a wages payable account and it totaled up to $5,000. I also added to my wage expense account $5,000 more. So we want to go ahead and record the additional liability account, wages payable or salaries payable. Again, remember I said I called it wages instead of salaries, and I wouldn't take off any points. So whether you want to call it one or the other, that's fine by me. That's for $5,000. And we had an adjustment to salaries expense. Remember, salaries expense was already on there at $50,000 because we had paid some of our employees during the year. But now it's just $5,000 more. So instead of $50,000, it'll be $55,000. Okay. The next one was my deferred revenue and recognizing some additional revenue. I did not have a deferred revenue account. I had some sales revenue, but I added to it. My deferred revenue ended up at $75,000. And, I did have, if I go back, make sure I'm talking truth, which I wasn't. We did have it at $100,000. We reduced it by $25,000 because we recognized $25,000 of revenue. So that deferred revenue changed from $100,000. Now it's at $75,000. That's the liability account. And I could have just added it directly to sales revenue, but I just chose to separately report it, sales revenue from deferred. And now we're going to add an additional $25,000 to that. The next adjustment I made was interest expense and interest payable. Neither had been recorded on my unadjusted balance, and now both of them have a $6,000 balance. So I have interest payable to record and interest expense to record. Both new accounts, both at $6,000. The next one was the recognition of depreciation expense, changes to the accumulated depreciation of those items. So let's go ahead and record that first. Depreciation expense comes in at $21,667. And that was actually, that effect of $21,667 was split between two contra accounts, two accumulated depreciation accounts. One was to the equipment, which is now at a balance of $10,000. One was to the building, which is now at a balance of $111,667. All right, so now we have those adjusted correctly. Also in this cost allocation entry, I used amortization expense, which remember is the allocation of costs. It's basically depreciation for intangible assets. I debit that for $4,000 and create the amortization expense. And then I credit the amount of the patent. So the patent had been at $20,000 and I credited it by $4,000. So now I'm going to have a patent account at $16,000. And we also now record the amortization expense of that patent at $4,000. Remember that by convention, when we apply cost allocation to intangibles, we don't have a contra asset. We don't have accumulated amortization. It wouldn't be technically incorrect. It's just by convention, we skip a contra account and just credit the parent account directly. And with the taxes, that was our final entry. That's the final piece we're missing here. Our tax expense was $41,667. Taxes payable were $41,667. So I'll go ahead and drop in that payable. as well as the tax expense. Now comes the time, the true gut check of all your hard work to see whether debits and credits line up appropriately. So I'm going to go ahead and do this in real time and do a little calculation. Do it on your own as well, just to check to make sure you wrote down those numbers correctly. Always double, triple check your work. Totally pays off. A lot of times we'll just write down one digit wrong. Silly mistakes. But as long as you show your work on exams, I'm very forgiving of those sort of silly mistakes. So make sure you just give me as much work as possible. And I always double check my sums when I'm doing this, because I know I've made so many mistakes in the past, especially when I'm fat fingering into the calculator. So my first answer is 1,464,334. I'm going to check that, and I'm not going to add up all the numbers again. I'm actually going to check it by going backwards and subtracting all the numbers and seeing if they hit zero. See, like already I think I might have left off dividends, but we'll see. So subtract. And in fact, I had left off dividends. So you want to make sure that you do a different process just to make sure that rolling through, one of the ways that I was taught to edit a paper is you read it going forward, but then you also, when you're looking for spelling, read the words backwards, because then it jars you and makes you think of it in a separate way. I'm going to add my credits now and see if I get a similar response. And I do, is after I include dividends in my first calculation that I showed you, it is 1,474,334 credit, 1,474,334 debit. So we balance, and again, that doesn't tell me I've done everything perfectly right, because we can balance on a trial balance and still get it wrong, but it gives me a level of confidence that I can now proceed to the next step and go into closing entries.